Coinbase, the largest American crypto exchange, is borrowing money from Goldman Sachs. While the loan value hasn't been disclosed, it has been collateralized with Bitcoin, bringing legacy financial institutions and new age fintech firms even closer. How is this moving the markets, and what could it mean for the evolution of new age financial products? Damien Loh, CEO of Matrix Asset Management, joins in to discuss this and lots more. Great to have you with us, Damien.
Thank you for having me.
Damien, Goldman Sachs, one of Wall Street's stalwarts, lending against Bitcoin is pretty significant, and the Coinbase CEO says it bridges the gap between fiat and crypto economies. What do you think?
I think it's definitely a big step, but it's not. The trajectory is still the same as what I've been expecting and I've been thinking for the last few years overall. The pace of institutionalization continues, and if anything, it's accelerating. And while this is a big milestone, I think it was bound to happen at some point where a large investment bank would be teaming up or doing a proof of concept trade with a big exchange or a big crypto native player overall. So I congratulated them for the deal, and I think there'll definitely be more to come in the future.
Interestingly, Goldman has made the loan without holding the Bitcoin collateral themselves, which instead lies with a third-party custodian. Why would they do that, and how could it influence the structuring of such future loans?
The commercial terms weren't that important right now, at least for Goldman. It really was more of a proof of concept for them overall. What's more important, I think, was that they were able to build the commercial terms into the yield itself, and that they had some kind of collateral that they could get their access to, even though it's held in escrow overall. And in the future, when Goldman has more use cases for Bitcoin overall, I'm sure they could restructure the deals differently for all their loans overall. So for the first one, I'm sure they were just fine with a third party holding it overall.
Now, compared to traditional loan products, crypto loans come at high interest rates, and in many deals so far, loans have been raised between 40 to 60% of the value being pledged. What's your sense here?
I think it's a combination of a few factors. One is the comfort level of taking the coin, mainly Bitcoin, but other cryptocurrencies as collateral. So there's that initial comfort level. Once there's a little bit more historical data for it, I think those loan to value ratios will improve. The other things that I think will make it change is that as cryptocurrencies become less volatile, as it becomes something that everyone holds overall and the volatility comes down, the loan to value would decrease as well. Thirdly, and I think that as there's more and more adoption, there's more products where you can actually make use of the Bitcoin rather than it just sitting in a cold wallet somewhere. I think that would also improve the loan to value ratios overall for the loans. So yes, initially it's like that, but I think it will just be improving overall. So the trajectory is the right way, even though the starting point might not be where we want it to be in the future.
We are seeing innovative financial crypto products, not just at the institutional, but also at the retail level. Crypto lender Nexo just gave out an over $3 million loan against the collateral of 2 CryptoPunk zombies. What sort of scope do you see for products at the retail level?
I think there would be a lot. So what will happen is that there's a lot of innovation going on. Obviously, just where there's a lot of creativity and there's a lot of different people trying new things, a lot of it will not get the traction and the network effect that will make it enduring. But from that, as you saw in 2017, when DeFi projects were being worked on and it actually got developed over the years, there'll be a few winners, but those winners will be really innovative, really well adopted, and it's a really good environment to continue the creativity, the fostering, and the expanding of cryptocurrencies overall. So yes, we'll start to see more of these things, and I think it will flourish. But which specific protocols, instruments, it's hard to say who will be the winner overall.
Well, it's just the start for innovative financial products, and there's so much more to come. Thank you so much, Damien, for joining us today.
Thanks again for having me.